So our last question comes from David S. on Instagram. David says, Robert and Austin, hello. Since following you, my family has figured out our budget, we've automated our savings and our investments, and we are so happy to feel so organized and will likely retire very wealthy when the time comes just because of your advice. So thank you. David, let's go, dude. That's amazing. David says, I'm 49 years old and I have a question. 10 years ago, I was sold on a whole life insurance policy. We've paid $10,000 every year and we're finally finished with our premiums. The cash value is about $111,000 and the death benefit is $324,000. I can borrow against my cash value at a 5.5% interest rate. My question is, do I keep it? Or do I somehow cash it out? If I do cash it out, what do I do with the money? Thank you so much. Keep doing what you guys are doing and teaching us all about personal finance. Well, again, David, super big shout out to you and your family for getting right with your money, taking control of your money. It is the best feeling. I talked about once you have complete control, autonomy, and visibility into how much money you're making, what you're spending, what your projections are, and you're able to forecast, it's like taking the limitless pill. You just see the world differently. It's amazing. So Robert, I'll let you kick off this question from David.
Yeah, I don't like the situation. I think whole life insurance for me isn't the answer for a lot of people. And in your situation, I would rather see you take the cash out of the policy, invest that into the VOOs and the QQQs of the world, have a balanced, low-cost ETF portfolio, because even after fees, let's say you net $100,000 from the policy as your surrender value, that $100,000 over the next 20 years, when you would be 69 years old, would be infinitely more than $324,000. So that's what I would personally do. And then to make sure you still have insurance, then I would get a really good term life insurance policy, which is more affordable and just makes much more sense for your situation. That's my opinion. Always consult with a professional, but don't consult with a professional that's trying to sell you something. Austin and I have nothing to sell. We're here to help people build financial freedom. And I don't know the numbers yet. I'm sure Austin's going to have it calculated. But if you take that $100,000 for 20 years and invest it in 8, 9, 10% return, it's definitely going to be infinitely more than $324,000.
Yeah, it's pretty close to about $700,000 to $800,000, depending on what those returns look like for the next 20 years. Obviously, we can't predict the future there, but assuming a 8, 9, 10% return, if you took that same $111,000 and you just parked it in the stock market, the S&P 500, you would have much closer to $700,000, $800,000, which is much higher than $324,000. Now, here's the mistake you don't want to make. Before you cash out on this policy and forfeit this death benefit, you need to have term life insurance in place, because the worst situation to be here is I cash it out and then I wait a couple weeks and then something happens and now my family loses out on this death benefit and there's no insurance. So don't do that. Before you cash it out, there'll be a link in the show notes below to go to Surience.com/richhabits. Go talk to Russ McBride or Robin McVeigh on their team. They're incredible people. We work closely with them because they are awesome proponents of term life insurance. They're going to shop the best rates for you. They sold me my term life insurance policy from Prudential. I've got $1 million policy. I pay like $50 a month. I mean, it is awesome. And so that's what you want to do. You want to go hit up Surience.com/richhabits, link in the show notes below. They'll shop a policy for you. Tell me what $1 million or $2 million policy or $500,000. I don't know, whatever works for you. And then pay $50, $75, $100 a month in premiums versus nearly $1,000 a month in premiums like you have been with this whole life insurance policy. I'm sorry that you got bamboozled 10 years ago, but now is a great time to cash this thing out, pay the fees, the surrender charges, whatever's going on there, and get it invested. That's the key. Get this money invested and working for you, and hopefully by the time you are 70 years old, you'll have another $700,000 or $800,000 in an account for you to enjoy, and then say, thank you, Rich Habits, for helping me make another couple $100,000 with my money.
And I want to add too, because it's so super trendy right now throughout all social media, is be very careful of the new whole life insurance that everything is getting pushed around, and that is indexed universal life. You're going to hear it called IULs. Be careful of it. We don't like them. Wealthy people don't use them. And the commissions and the fees on these policies are extremely high. So just be careful. Do your research before you sign anything. And if you're not already a Rich Habits Network member, we're there every single week answering your questions in the school community. But just be careful with your money, because there's so many things out there like whole life, IULs, all of these different schemes that they're going to sell you as great for your future. But at the end of the day, they're making more money with your money than you are. So be careful out there.